Welcome back. We have Julia joining us from Abbott Wealth Management on this Wednesday afternoon. Welcome back to the show.
Thank you so much, Susan.
Yes, we're talking about different types of investing, speculative versus value investing. So what's the difference?
So they're actually very, very different in lots of different aspects. So we'll kind of go over speculative investing, some examples, value investing, and some examples of that.
Okay, we've got some slides. I think the first one's sort of an introductory, speculative versus value.
So we'll start off with speculative here. So just some highlights on the differences. So uses technical analysis, quite a bit higher risk than value investing. It's short term and involves a lot of frequent buying and selling.
Okay.
So technical analysis involves a lot of technical things. So averages and trend lines and whatnot, how the stock price moves in the market.
Okay.
So essentially picks up on those trends and determines when to buy and sell.
Okay.
So that's the information that the analyst is taking in to determine those purchase and sell times.
Okay.
So these investments are considered to be more speculative because they have a lot of, they're very sensitive to news reports and whatnot. So if, for example, things like cannabis stocks and cryptocurrencies like Bitcoin, if something comes out with regards to legalization of marijuana, for example, that really affects cannabis stocks. So there can be a huge decline in the demand for those stocks, which drives the price down.
Right, and cannabis is in the news every day now, just because of that upcoming legalization date. So that's a very speculative stock.
Another one, the other example was Bitcoin there. So Bitcoin, if you bought that in December, you paid $25,000 for one Bitcoin at its highest, and now it's valued at $13,000. So depending on your timing there, could have resulted in a permanent loss of capital.
Okay.
So that's not generally how you make money. But if you had timed that at the right time, in 2012, one Bitcoin was $10. So there was an opportunity to make a lot of money, but it's very, very risky in that that price can change that much.
Right. But if you bought in at $10 and it's still at 13, you're still well ahead.
That's true.
However, quite a drop if you bought it at its highest point, right?
Yes, definitely.
Yes. All right, let's go to the next slide.
Yeah, so we'll look at value investing. So value investing uses fundamental analysis. So it looks at the business itself and looks at its potential earnings growth. So if we've got a little graph there, so some things to consider are intrinsic value and the market price. So ideally, how you make money with value investing is that you buy it when it's underpriced, so when the intrinsic value is higher than the market price. And you sell it when it's overpriced, so when the market price exceeds the intrinsic value.
Okay.
For example, or if we go to the next slide, there we've got some examples of value investments. So Royal Bank of Canada, in 2008, the financial crisis, share price had dropped to $27. Now it's trading at $105. So if you had bought it during that time in 2009, 2008, 2009, then held on to it, you get those dividends from the Royal Bank. About 3% of the share price is what they're currently paying for dividends. Held on to it throughout that time, potentially have sold it in the last year or two, then you make quite a bit of money. And the dividends all along that time.
Okay, and then Magna.
Magna, another great company, they have increasing dividends, increasing share price too, so nice solid company that kind of keep an eye on.
So would you tell me then that speculative is not as trustworthy as value?
It's yes and no. So speculative is that very short term, kind of like day trader style. So it's not with the intention of putting all of your money into a speculative investment. If you choose to include that in your portfolio, that's totally your choice. But it's not something that, say you want to put your entire life savings into that, with the chance of, say, you'd put in $25,000 for your one Bitcoin and it's dropped almost 50%. So like the value investing is that long time horizon. Say to 2008 to now even, the share price has increased so much and the dividends have paid out so much every year or every quarter over that time. So you're coming out ahead overall.
Right, if you've got the time to invest.
Exactly, and to hold on to it for that long.
Right. We saw a slide come up sort of balancing the difference between reward and risk.
Yes.
So, of course, that's always something you have to consider.
Yes, definitely. So lots of people are very risk averse, and they would rather take a sure loss than a chance of losing, say, 50% of their money.
Sure. So it really depends on what your comfort zone is, on the way you want to invest.
Definitely.
And that's what it comes down to every time.
How much sleep
you want to lose.
Yeah.
I know, I hear that. All right, these are great tips today. Did we get through everything you wanted to get through?
We actually did, yeah.
Awesome. Julia, thank you for being here today.
Thank you so much, Susan.
Yes. If you have any questions about this topic today or any other questions regarding your investments, you can certainly give Abbott a call or send them an email or look them up online, abbottwealth.com. We'll take a quick break. We'll be right back. Stay with us.